Imagine this. Oil prices are on the verge of a major shift, and understanding what's driving this change could be the key to navigating the energy markets. But here's where it gets controversial. Can technical analysis methods like Elliott Wave truly predict the next big move? Let's dive into the details and explore why traders are closely watching crude oil, CL, as it teeters near critical levels. Crude oil has been displaying unmistakable signs of a bearish trend since its peak on June 23, 2025. This downturn is unfolding in the form of a zigzag Elliott Wave pattern, which provides a framework for identifying potential price movements. The initial leg of this pattern, labeled Wave A, saw prices drop to $64 after peaking earlier in June. Following this decline, Wave B brought a corrective rebound, pushing prices back up to $70.58. These swings can be visualized on an hourly chart, offering traders insight into the market's momentum.
Now comes Wave C, which is currently underway and taking shape as a 5-wave impulse structure. Within this larger wave, smaller subwaves have already played out. For instance, Wave I concluded at $68.56, followed by a brief recovery during Wave 2, which topped out at $69.58. Subsequently, Wave 3 drove prices lower to $66.56, with Wave 4 partially retracing those losses by climbing back to $67.74. As of now, Wave 5 is actively pushing prices down further, reaching as low as $61.94. This marks the completion of Wave I in a higher degree Elliott Wave cycle. What happens next? A corrective rally, labeled Wave I, is expected to unfold in the short term. This correction is likely to follow a zigzag pattern, characterized by 3 distinct phases. In the first phase, Wave A, prices climbed to $64.15. Next, Wave B formed a triangular consolidation, bottoming out at $62.52. Finally, Wave C is anticipated to push upward toward the $64.68 to $66.01 range.
This range corresponds to a Fibonacci extension of 100%, 161.8% relative to Wave A. Once Wave I concludes, the broader downtrend is expected to resume, barring any unforeseen disruptions. For traders monitoring these developments, it's essential to keep an eye on the $70.58 level. This threshold acts as a pivotal resistance point. If it holds firm, corrective rallies will likely fizzle out within a 3, 7, or 11 swing pattern. Such patterns often signal that downward pressure remains intact, reinforcing expectations of additional declines ahead. But let's pause for a moment. Are such predictions foolproof? Critics argue that relying solely on technical indicators like Elliott Waves may overlook fundamental factors influencing oil prices, such as geopolitical tensions or shifts in global demand. Proponents, however, they believe that combining technical analysis with a solid understanding of market dynamics creates a powerful toolkit for decision-making. Where do you stand on this debate? Do you think tools like Elliott Wave offer valuable insights, or do they oversimplify complex market behavior? Before jumping into trading decisions based on these forecasts, remember that the foreign exchange and commodities markets present unique challenges and opportunities. While above-average returns are possible for well-informed and experienced investors willing to take calculated risks, newcomers should tread carefully. Never risk capital you cannot afford to lose. It's also crucial to recognize that no service, including platforms offering Elliott Wave analysis, guarantees success. Even seasoned analysts get it wrong sometimes, underscoring the inherent uncertainty of financial markets. Lastly, always respect intellectual property rights when using proprietary content. Unauthorized sharing of materials, such as analyses, charts, or signals, violates copyright laws and terms of service agreements. Violators face significant consequences, including hefty fines equivalent to yearly subscriptions at full price. So, if you're considering leveraging expert insights, ensure compliance with usage policies to avoid unnecessary legal complications. In conclusion, while Elliott Wave theory provides a structured approach to anticipating oil price movements, It's just one piece of the puzzle. By staying informed about both technical and fundamental factors, traders can make more confident decisions. Now we'd love to hear from you. How do you incorporate technical analysis into your trading strategy? Share your thoughts below.